What's going on, everybody? My name is Lamont. I've been a full-time trader for 7 years now, part of the Chart Guys team for half of that. And in this video, we'll talk about how the buyers are remaining resilient and whether or not pullbacks are viable. So let's get into it. All right, so starting off with SPY here, the overall market. So we closed off the 2 weeks prior with a break into new highs, and this week really was just building on that because Monday's trade was just balanced. Tuesday's trade came under Monday's low, but the goal for sellers whenever there's a breakout is to negate that breakout. And so for to see Tuesday's low break under Monday's low without really advancing at all, they barely came down to back just the 60133 level, was indicative of weak sellers. And on Wednesday, you have a gap up situation where you have an incomplete gap fill, again, indicative of weak sellers. So this is all information that you should just carry forward, right? As long as these buyers are continuing to press higher into new highs, as long as sellers are failing to backtest prior breakout points, there's really no red flags, right? These buyers are still doing just fine. So that being said, these are a few lows that are very close to each other, right? So when you have a bunch of lows that are rather close to each other, you probably have late location longs, right? So people who are shorter term time frame operators who are kind of late into this move, if they're buying on this session or this session or this session, their stop is probably under the low of the day, right? If you're a later term operator or a later term buyer. And so if you were then to trigger the stops under this low next week, you likely trigger these stops as well. There's kind of a decent amount of distance between this one as well. So, maybe not from here to here, just something to be mindful of. But even if meaningful sellers do enter the market next week, again, if they're holding over 60133, it's really not a big deal. Additionally, this is really the key structure that we care about, right? Here is the prior all-time high structure. The structure was affirmed as demand throughout these 2 sessions. There's a good amount of volume traded there, and so as long as these buyers can hold over 598.16, then this structure is still being affirmed as demand. And as long as this structure is still being affirmed as demand, well, then higher prices relative to the prior all-time high structure are being accepted. So to answer the question of are pullbacks viable, I would say so. I think there's really no red flags, as we've been saying for a long time now. There are really no red flags for these buyers. So I would just go ahead and move this guy up here, right? I would say something along these lines now makes a lot of sense. Where the volume picks back up, something like that is fine, right? Um, it's really no different than these setups back here, right? What was this setup if not just looking for a backtest of this prior area of demand? What was this setup if not just looking for a backtest of this prior supply now acting as demand? So that's really it. And I think that if you do hold this structure over here, then we should be looking up at the pivot, right? So the pivot for the month is up at 614, or rather the R1 for the month is up at 614.64. So I think if you hold this back test over here, that you likely see a move to try to get to the R1 for the month, essentially the Santa rally, right? Because December, I mean, there's a lot of like seasonality going for it, right? Because typically December is a strong month. We've already had the strong first half of the year. Normally, when you have, or more often than not, when you have a strong first half, you typically have a strong second half as well. And again, there's really no red flags. And so the answer to how the market has remained resilient is because of the rotation. So as we were talking about in prior videos, the pretty much the best case scenario right now is occurring, right? We were wondering if, okay, well, right now the Nasdaq 100 was kind of rather last week the Nasdaq 100 was lagging, right? They still had overhead supply. It didn't look that great, but we were pointing out the fact that, okay, well, financials here were still ripping to new highs, right? We pointed out last week, we flipped through all those different sectors, and let's see, and we pointed out how most of these sectors are near the highs. XLV is not, but it's still holding over this really large area of demand. Like that, this is years of sideways trade here. So as long as we're holding over these years of sideways, it's still constructive, bigger picture. X left near the highs, Y near the highs, C near the highs, I near the highs, P near the highs, E a laggard, U, still coming off of its highs, but still holding over the prior all-time high. builders a bit of a laggard, and real estate a little bit of a laggard. So the idea though is that the rotation is still going on, right? If the major sectors, primarily healthcare, tech, and financials, are continuing to just take turns leading the way up, then the market's still going to maintain, its composure. So that's what we should continue to look out for, in my opinion. So here's a really key test for XLF, right? Whether or not these sellers can trade through this area of demand. The best case scenario now for XLF would be for if these buyers could just hold over this guy and just kind of trade sideways for a bit over here, such as like this, while the QQQ continues to rip. And then if the QQQ does begin to consolidate and can hold over a backtest of prior areas of demand while XLF then continues on, that would be ideal. And so that's pretty much what we should be looking out for. So this is a lot of space for these buyers now to work with to defend with a potential higher low over 501.93, and there's also a lot of space to defend against the all-time high structure, the prior all-time high structure, I should say. Its point of control is at 513.24. So 515.58 is what we care about first. If these sellers can't get back under 515.58, they don't even negate this breakout. And as long as you're holding over 513.24, then this structure is being affirmed as demand, and there's really no problems. Just like over here, this breakout on this backtest was just backtesting this prior all-time high structure, and because they held the point of control of that structure, no problem. These buyers were doing just fine. So it's the same situation right now with this with the updated trade zone. We can do the same old adjustment here. We'll just take that guy over here. And hold on, let me just take a look at what the volume profile looks like. Something along these lines I think is pretty reasonable, right? You don't want to crack through this guy too much. And of course, we have this prior all-time high here as well. So I wouldn't be surprised, because this is a higher time frame all-time high from over here, right? Rather a higher time frame pivot from over here. I wouldn't be surprised if we were to backtest that area again. So something like this, I think, is pretty reasonable, looking for a pullback play. And again, this yellow line is pretty much the R1 for the month. That's what I would be playing for, well, what I am playing for, if we do hold back here. Like, this is definitely a futures play that I'd be interested in. If we get hourly oversold into this area, I'd be looking for these low time frame setups to be looking for some more range expansion into the R1 for the month. Okay. So that's pretty much it for the Qs. And then for the RUT, so the RUT, if you recall last week, what we were saying was the best case scenario would be for these buyers to continue holding over 239.19. That's the point of control of this all-time high structure, right? Because right now, the IWM, the small caps, are still a bit of a laggard, right? Because they've not broken to new highs yet over the 2021 highs, whereas SPY and QQ has. So the objective right now, the best case scenario, would be to continue to affirm that all-time high structure as demand. That's looking a little bit sketchier now, with their, finding a little bit more acceptance under this point of control at 239.19. You can see how it was defended multiple times. Buyers defended it here, they defended it here, they defended it here. But there's been more acceptance throughout, under the level, throughout Thursday and Friday's trade. So if next week we continue to see advances under 239.19, it's really all about 228.63. Now remember, the RUT is 2,000 individual names, so more or less, right? It's not always 2,000 on the dot, but the idea is it's very hard to get all 2,000 of these assets to agree, right? So that's why you see a lot more back and forth in something like the RUT when you compare it to like in the NASDAQ or even the SPY, which is like heavily weighted in a few assets, right? The Magnificent Seven, right? So with the RUT, then I really would not be surprised if we were to come back down here and test 228.63. That's just kind of what the RUT does. The RUT spends a lot of time going sideways. Like, this was like a year sideways. This was, I don't know, like half a year, or at least 1 to 2 quarters, and then this was over a year. So I would not be surprised by that. So for the RUT, I would not update this trade zone. I still think the most reasonable place to be taking place for the RUT is still just looking to back test off of this guy. Pretty much why we had all those plays within here, balance plays here and balance plays in here, which I think we spoke about last time as well. I think some of those trades were set up in here, right? So bottom fishing plays here. I think we had more setups in here, but I don't want to waste too much time looking for it. So anyway, that's the idea. A responsive trade off of backtest of this guy, I think, is very reasonable for the RUT. Hourly oversold into this area. I think that's really what we want to be doing for any plays within the RUT. Okay. That's it. And moving on here to, let's see, the Dow. All right, so for the Dow, again, I really wouldn't make a change to this, right? So you had a daily higher low, higher high lacking follow through. Whenever that occurs, you have to just be open to the potential of seeing further balance. Now, what would balance look like right now? Ideally, for buyers, it would just be within this local balance. So if we're going to higher low, higher high here and not see follow through, then ideally we see a lower low over here, which is pretty much the lows of this current local balance, not see follow through as well, and then just continue to trade sideways. Now, this low is pretty much just a backtest of this prior high over here, right? Incomplete gap fill, hold that prior high, and then just trade sideways. So the best case scenario for these sellers, for these buyers, if the sellers were to press the issue next week, would be something like this, right? You fill the gap a little bit more, but don't come back down to 443.57 and continue to trade sideways. I personally would not be that aggressive, right? I prefer looking for a trade. Again, I wouldn't adjust this trade zone. I still think this is a more reasonable location to be looking for a potential hold. Honestly, this was the more aggressive one. I still rather prefer this one, just looking at how much more value was established here. So if we were to see like a rug pull kind of a situation next week with some, or in the coming weeks, get things really beaten up, you might even have daily oversold conditions. You would even have daily oversold conditions if price were to come drilling down to this 42108 level. I would actually prefer it down here. So this is a bit more of aggressive setup, but again, I would prefer it here. Okay. So that's pretty much it. Now, that being said, just because I would prefer down here, we should also just talk about what the implications are. As of right now, this has the potential to look like a bit of a head and shoulders here, right? So if we do break down from this supply over here, leave some overhead supply, and then bounce and can't get back over this guy, that's going to continue to increase the probability that we're looking at a bit of a head and shoulders like structure here. And then what we would care about then are these longer time frame structures, right? So, okay, if we're going to make that head and shoulders here and then come back into here, well, then obviously what would be the goal would be to hold over this guy, right? It's the next step down, right? So as long as we can just continue to trade sideways and not take out too many areas of demand lower, then that's going to keep these buyers positioned, the best for a potential follow through bigger picture. Okay, so that's why, I'm a little bit more wary of these low volume holds over here. I'd be much more interested to see what happens where there's a lot more value established. Okay. All right, so moving on to the dollar here. All right, so this is notable, right? So the dollar, you have this daily lower high, lower low. So the goal for these sellers now is to continue to find acceptance under 106.335 and 105.720. The big one is really 106.335. That's the point of control of this structure over here. This is the structure that has continued to act as supply, rejecting price here, rejecting price here, rejecting price here. And I'm just got this guy marked up because it's kind of just sitting right under it, and it was what led to this major selling over here. So it's notable that as of right now, at least, not only are you getting a lower high, lower low, not see follow through, but as of right now, this breakout from here, so this breakout from November 11th, not yet been negated, and the sellers so far have failed to touch down on the breakout point 105.345. So I still wouldn't change my tune here. Like, as long as you're finding acceptance under 106.335, that structure is being affirmed as supply, and it increases the potential that we rotate back down to test the lows of this multi-year range, which is what this trade zone was designed around. And so I would still just prefer, though, like if you're looking to sell the dollar, I would like to see a little bit more follow through, right? Move a little bit lower, maybe hold the back test of this like 3-day balance over here, such that when you were to come back up here, okay, now things are extended on the buy side, and the odds of successfully fading a move that's buying into this point of control, so to sell that after buyers attempt to rally back above that level, if they don't see acceptance under it, selling that move back down under it, throwing your stop over the high, and then looking to take your risk out of the equation so that you could potentially do essentially the reverse of this trade. It's the only trade that I think makes sense for the dollar right now. I don't even really like buys in here, because just buys in the middle of a range are just much trickier. They're a lot trickier to handle. Like, you can see a bunch of chop in here, for example, a bunch of chop in here, for example. It's hard to predict the direction in the middle of the range. It's much easier to get a sense for what should happen at the extremes of the range, which is, again, why we set up this trade zone as such. Okay, so that's pretty much it for the dollar. All right, so for NVDA, all right, so just like we were talking about the sector rotation, right? So with the tech sector leading the way right now, obviously that is good because if the financials are going to come off the highs, if the tech sector can lead for a little bit, then we're going to, we'll still see this capital rotation between the sectors. It's pretty much the best case scenario for the overall market right now. Well, the second best case scenario, obviously the first best case scenario is that everybody's just ripping up. But anyway, that's not the case right now. So, you can look at the Fang Man T names, their Magnificent Seven names, as in a similar fashion, right? Like if they are all taking turns ripping to new highs. So while NVDA rests, Apple perhaps maybe is breaking to new highs, which is the case right now. Well, then the rotation within the tech sector then is going, is continuing to be present, which would keep the tech sector happy, right? So that's kind of what you're seeing right now, right? Where NVDA had this, crazy meteoric run essentially, and now it's kind of been stalling for some time, just kind of trading sideways ever since this breakout back in May. Now, I know this is a lot of range to trade sideways, but it is still bigger picture, just kind of trading sideways here, right? And so the odds of us seeing this break not see follow through, I think pretty good, right? Because if the other tech names are going for a run, like Netflix is at the highs, Apple is at the highs, then it would stand to reason that it would be fine for these other tech names that have already had runs to kind of consolidate for a bit. Like Microsoft, I think, has been kind of trading sideways for a while now, right? So, they're just in these holding patterns, right? And so if these names that have already run, right, they've already seen like a lot of buying from like AI hype and whatnot, like Microsoft and NVDA, then if they take a little bit of a breather here while other names run, that's going to keep the tech sector happy. So I think it's still pretty reasonable to be looking for those plays within this zone, but I would prefer it if we could be down here. Like I would much prefer it if we were to just see this as a pop and drop, a break to new all-time highs that doesn't see follow through, and then boom, trade all the way back down here. Again, it happens very, very frequently, right? Like if we just pull up, for example, like Netflix traded sideways for a really long time throughout here, right? And actually, I'm not thinking about, it wasn't Netflix that I'm thinking about. I don't want to reveal something for next week. I guess it was, let's see. Tesla is a good example, right? Where we have traded sideways in Tesla forever now, right? For ever since 2020. So 4 years, we've pretty much traded sideways, and not only now are we finally approaching the highs. So that's the idea. Where are my trade zones? That's weird. Oh, they're in there. Where's the Singapore trade zone? Oh. Anyway, so that's the idea for NVDA at least, right? So I would love it if it's just in like a really long-term holding pattern, because then that would give us opportunities to make some purchases down here. Okay, I know that's like a 40% decline, but that'd be great. Right? This was a pretty much 40% decline, so not unreasonable by any means. All right, so that's pretty much it. So intermediate plays, I think it's reasonable to be looking in here, but bigger picture, if you're like trying to look for a location where you can likely hold it for a long period of time, ideally we'll see another test of this structure, this key structure over here. Okay. Moving on to Bitcoin. So Bitcoin, I think this was a 4-hour play setup. Okay, so it didn't shake out too well. But this was a very aggressive sell that we were talking about on the stream. It's not really relevant to right now, but on the daily time frame, there's really no red flags, right? So as long as these buyers are holding over this area of local demand, its point of control is at 895 for 1.25, and it hasn't even been tested yet. Like you break down under the value area high of the structure here with no follow through, and then over here you only broke the high at 93.93495 with really no acceptance here. So no red flags. Now, this is a similar situation to NVDA, where like if you're a short-term operator, you're making plays right off of this guy as a buyer. But if you are looking for a longer-term position, then ideally we'll see a move back down to backtest this guy. I would be pretty surprised if Bitcoin doesn't eventually. It doesn't have to happen soon, but I would be pretty surprised if Bitcoin doesn't eventually come and backtest this structure. It's just kind of how the market works. If you'll notice this guy and this low over here, so this low throughout all of this balance here is pretty much just a backtest of this guy over here, right? And this low over here is pretty much just a back test of this guy over here. Even this local structure, the lows of it, pretty much just back testing this high over here, etc. So does it always have to happen? Absolutely not. Does it happen all the time? Yes, it does. So that's kind of what I'm looking for here, right? Because the market spends so much time balancing here, trying to resolve this prior all-time high structure. It would stand to reason that eventually we would want to backtest this guy and see, okay, well, do we still have perceived demand coming out of this fella? And crypto is kind of known for that, right? For some big old retracements. This is a 34% move, so this would be about a 30% move as well. I think that would be totally reasonable. I'm not calling for it by any means. We never get to know what's going to happen. We only get to know what we will do if something does occur, right? So if that does occur, I would be very interested as a buyer here. Reload some Bitcoin. All right. So that is pretty much it. So again, shorter term operators are playing in here. Bigger term or longer time frame operators are waiting over here. Okay. So for the short term operators, you kind of want to be looking at it something like this, right? Like you should be open to the potential that you see a lower low here, not really see follow through under this area of demand. And the idea is you don't want this two-way trade to get traded through. So give yourself a little bit of wiggle room here. Something like this, I think is pretty reasonable, right? Because you'll probably get a bunch of tests of this structure as long as you're not continuing to advance. So something like this, looking for a responsive trade and then taking your risk out of the equation, I think is pretty reasonable, right? Then throw a stop under local low and see if that would be the low of this balance, and then ideally, ideally it breaks out for short-term operators. Ethereum. So Ethereum, flirting with a break. So it's testing this super key structure, right? So this is the all-time high block. Essentially, all of this supply is the only supply left in the way before Ethereum sees some new highs. And as of right now, we're currently testing that key structure, right? So the last two times that we've been here, buyers failed, and things are a little bit extended on the daily time frame from an RSI perspective, but I don't really consider that big of a deal right now when the market is just kind of in a buy mode. Now, obviously that can change, but as of right now, there's really not any red flags still for buyers, right? I think the fear and greed index it's probably even chilled out a bit. I don't know. Let's see here. It's back to neutral. That is interesting. Um. Anyways, that's probably just for the session, based on the session on Friday's session. Okay. So anyway, I would be hesitant as a buyer here though, right? Like I think if you're gonna be a buyer here, you either want to be still waiting for this because there is still the potential that we're just gonna balance within this structure. And so if you do happen to reject from this guy again, what should we expect? We should expect these sellers to try to test the lows of this range because this is really the local structure right now that these buyers are trying to make their way through. So I would still primarily be interested down here. Now I know that would demand, like a 30% or so decline. I understand that, but that's already happened many times here. So that's really that's what I would be most interested in. I don't really care to do any momentum trades. Now, that being said, if you do see follow through over 4017.56, again, that's the point of control of this structure over here. If you do get a big old pop over it, so like let's say you get a lot of follow through over this guy, right? And then maybe reject from the next meaningful structure, but you create a good amount of space over it, then I would be interested in taking this kind of a trade idea over here and just applying it to looking for backtest of this guy, looking for backtest of this guy. So for me, Ethereum, just the wait and see. And that is pretty much it. This local trend though on the daily time frame is totally fine as long as these buyers are holding over 3762.72. Okay. Oops, sun's coming up. And then finally for CCJ, so CCJ break into new all-time highs again. Bit of a pop and drop right now, but technically still holding over this breakout point 60.98. At this point now, I think if you're looking for, honestly, I would just keep looking for plays off of this though. I really wouldn't adjust this, right? Like a momentum style trader, you can be making plays off of this structure here, this local demand. But the way that CCJ, it just kind of has a propensity to go back and forth quite a bit, kind of like RUT. So I wouldn't be surprised if this prior all-time high structure over here were to continue to see some backtests. So personally, I would just stay on this one. And if you have a position from this trade zone shared, a few weeks ago or whatever, and you're just walking your stop up, At this point now that you did break to a new high, I think it would be reasonable to walk your stop down under here. So basically, if you're still managing your position from the trade zone that was shared back in October, then you're just waiting for these areas of sideways to be created, right? And then once it breaks out, very reasonable to be walking that stop up. So because our original play was in here, once this area of sideways was confirmed as demand with this breakout, then it becomes reasonable to walk the stop, right? We don't want to just leave it down there. We'll move it up. And then once we break out again over here, rather once we trade sideways again and then break out again over here, reasonable to walk that stop up to under here. Okay, so that is pretty much it. Appreciate you guys tuning in. Thanks for sharing some of your time and energy with me. If you're interested in a community of 1,000 traders or so, a bunch of us are full-timers, check out our community. Links in the description below. If you are interested in this report where we will send out weekly updates, 2 trade ideas every week. Dan does updates as well. And any idea that I trade, I just put out alerts for every single activity that I do. And that is pretty much it. So hope to see you next time. Farewell.